All right, guys, we are in a bull run. The question is going to be, how long does this bull run last? What is the move that Bitcoin is currently undertaking? We'll break it all down for you guys today. My name is Paul Barrow. Welcome back into Tech Path. I want to thank our sponsor today, and that is Margex. If you guys are looking at going into crypto trading, you want to do it in a little different way, you can do it over at margex.com. Very easy to get involved and super simple. They've actually created this platform to make it easier for first-time users. So, of course, you guys can do things like copy trading. Very easy to follow other traders and how they're performing and get a chance to kind of watch how their performance has been. I think that's a big advantage. I think when you look at moving into the market, especially if you're brand new to crypto, this is a great place. One thing you can do here, guys, is go ahead and make these trades, go into self-custody. You've probably heard us say that before. Their platform is pretty easy to check out. Plus, if you're going into this, you'll recognize this. It's a normal dashboard. Very easy to trade and do trading within the copy trading as well. So check it out. Use our link down below. It will give you a little bit of a discount. And of course, claim some bonuses. Make sure and use the code once you're logged in. So we leave the instructions down below. Today, we're going to dive in a little deeper. And I think one of the things that I want to get into has really been around whether or not this bull run is going to last long. What would we see if the market shifts quickly? And I wanted to bring on a gentleman by the name of Chris Vermeulen, who has been talking about this for quite some time. So Chris, welcome into the show. How are you?
I'm good, Paul. Thanks for having me on the show. Pleasure.
Excellent. So technical traders, just a quick rundown. What does technical traders do? How do you guys work your business so we kind of understand where you're coming from?
Yeah, from a high level, I'm a technical trader, meaning I just follow price. I don't care about news. I follow price, money flows, cycles, sentiment, things like that. And I really just invest my own money and I share it as a newsletter at the Technical Traders. So I analyze the markets and I share my ETF trades for anyone to copy what I do. I ride the coattails of the markets. People ride my coattails, and that's it.
I like it. I like it. Well, excellent. Well, I'm going to have to jump on your newsletter for sure. I want to get into a few points right now where the market currently is. Obviously, the S&P now up 26% year to date. Let me kind of zoom in on that for everybody. Best, and this is on track now to post its best election year performance in 88 years. So the index has now returned more than during the previous 3 election years combined. Pretty significant when you look at the performance right now of where the market stands. And we're going to get into a lot of, some crypto related stuff, but in general, a lot of the sensitivities of the market relate to what's happening in the crypto markets as well. When you look at the current market right now, is this going to be kind of the Tom Lee vision of we are still in the early runs, or is this something that you're a little bit more concerned about right now?
I'm concerned longer term to look at like 2025. I think by the end of 2025, I think it's going to be a very difficult year for investors. I think the equities markets are going to soften and roll over. I think we're going to see a recession really kick in. So I think it's going to be very painful. But in the short term, we've got money flowing into the stock market. It's a broad market rally this time. So we've got money piling into all the aggressive spaces. Into cryptos, into lithium, uranium stocks, gold miners. Money's just going into small caps in general. So this is a good sign. So, Trump and Elon, more or less, like I kind of think of them as a combo. They're pushing and got people all worked up. And so this seasonality wise is a very strong push into the end of the year. So I do think we're going to see the markets want to hold up or continue to go higher into the end of the year. Come January, though, generally with the monthly chart, if you look at the SP 500, wherever January closes, if it's positive, it should be a positive year for equities. If it's negative at the end of January, it's usually a negative year for the market. So it's going to be very interesting to see how all that shakes out in the long run. And I'm long-term bearish. I think things are going to get ugly, but I'm still long the markets. So you can't fight this trend. So you got to ride this up.
All right. Well, let's break that down a little bit, because I think this is some good advice in the sense of being able to manage, risk, because a lot of people are going to be piling into what we've seen has pretty much been this wall of capital that everybody has been talking about for the past 6 months. Maybe now it is finally here. Do you think this runs well into the first quarter, or you had mentioned January, kind of take a look at the S&P at that time. Do you think this can go after Trump is inaugurated and we start to see maybe some regulatory framework get aligned, and maybe some of the risk assets like crypto starting to benefit from that? What are your thoughts?
Yeah, I think this could have a little bit of legs behind it. The market always has a way of dragging things out, and I think as Trump moves in, people will probably continue to be more bullish and feel like they want to risk money. I think people are looking at it as a good spot. So
Hmm.
again, I think it comes down to how is January going to close, and that's still a long ways away. That's 2.5 months away. A lot can happen. This momentum of everybody all worked up and excited about the election or hating the election, depending what side you're on. This emotion takes a while to work out of the system, and
Yeah.
portfolios are still trying to recalibrate and rebalance and everything. So I think we just need to let the sentiment and the emotions fizzle out and people rebalance. And then from there, we'll see how it goes. So I'm bullish, I think, into January. I don't know how January is going to end. I have a
Okay.
bearish feel to it, but that's about it.
I want to get into why you think the latter part of 25 could get a little dicey for not only the economy, but maybe the global scale as well around some other trading factors out there. But I want to jump into a couple points here. Crypto market now extreme greed. We may see some deleveraging before the 100K. Many people have been kind of talking about this right now. Last time we saw a score of 80 was on April 9th when we saw the last real run, especially in the risk assets, a lot of the altcoins that many people watch our show for. But if you look at this cycle too, do you think Bitcoin is going to continue to track with the S&P? Because it has not deviated as of yet.
I still see Bitcoin as its own. I look at almost every asset class and every investment as its own thing. And yeah, it might be tracking with it, but I still always kind of follow what that asset is doing. So, like, I really like Bitcoin. I haven't bought Bitcoin in like 10 years. And I bought some last week, and simply because the monthly chart has got the most beautiful chart pattern I have seen and I don't know how long. So I told everybody,
Yeah.
I'm like, I'm buying some Bitcoin, and of course it's popping and rallying because it shows where the first target was 87,900,
Hmm.
which we hit, yesterday, and the next one is 112,000 is the next upside for Bitcoin, and it looks like it's going to muscle its way up there from based on the chart. So I like Bitcoin in terms of what it's doing. I think it's going to perform very well going forward.
Very cool. So a couple of points you hit on is next price targets here. 1 billion in leveraged crypto positions were liquidated yesterday. This could be even further into liquidations around, especially around longs right now with Bitcoin performing again, almost clipping into 89,000 again. I think as we're maybe filming this, we've already eclipsed that. When you look at the next 2 months, as you had mentioned earlier, you like the let's say above 100K. Do you feel like Bitcoin is in a position to maybe run a little bit further, like some analysts? I mean, Tom Lee has been on record many times saying he feels like we could be in maybe in the 200K point of where Bitcoin could be for 2025. Do you think it's that strong?
I think it's going to go to 112. I really do.
Okay.
I think it's going to muscle its way there. Can it go a whole lot higher? So, like, one caveat: I'm not a huge crypto guy. My specialty is on the SP 500 bonds, the U.S. dollar index. I can navigate those and manage risk and positions very well. Crypto is not my space. The only reason I'm in crypto and Bitcoin specifically right now is simply because, from a technical standpoint, the charts are is pretty much as perfect as it gets. And so it's a
Yeah.
trade opportunity. I'm not looking at this as a long-term investment. That's not how I view crypto. I'm moving in as a short-term aggressive investment. I think it has potential to go much higher. So there's tons of potential. I look at it one step at a time, one stair step, one pattern at a time, and I kind of will play it that way versus kind of just
Good.
buy and hunker down.
Once Bitcoin hits that 112 range, I want to come back and kind of find out where your thoughts are at that point. Because
Sure.
you're
Yeah.
right. Right now, what we're seeing is a lot of active traders in the market that aren't typical crypto people, but are starting to move into this risk asset. BlackRock, of course, their ETFs surpassed 1.5 billion in volume in its first hour of trading. So
Mhm.
this again was more news and more mainstream. Are you seeing more traditional traders like yourself making this trade right now, or are they continuing to pour in to the S&P?
Um, I think we're seeing. I think we're seeing a lot more people move into crypto simply because now there's a whole bunch of ETFs. So now it's
Right.
really easy, right? I mean, and because there's so many, it feels like it's normal. I don't know. It's just you have kind of picking your litter between the ETF or the type of
Yeah.
fund that you can manage and follow. So people are getting more comfortable with it, and I guess the followers, the people that I talk about or talk with, we see it from a more like a very logical standpoint. There's a reason to get in now, right now specifically, because it's imminent. It's showing that we should see this 48% rally over the next 2 to 3 months potentially, and that's what we got positioned for last week. So that's why the people that I follow, we're not heavy into it at all, but this is kind of like, this is an opportunity to put some money to work, and it should have like a kind of rocket ship, Elon Musk kind of takeoff here as it shoots up to 112.
Here's Eric Balchunas. He's been on our show many times. Of course, we call him the ETF czar. But 90 billion in assets after yesterday's 6 billion jump, a billion in inflows, 5 billion in market appreciation, 72% of the way to passing gold's ETF. That's my next question. Bitcoin surpasses silver. Now we're looking at possibly taking, I say we, meaning Bitcoin, the asset class, starting to really challenge gold. Do you think gold has pretty much run its course right now, or do you think there's still some opportunity here with gold long term?
I think gold has more or less run its course. And kind of to tie back to a question you asked a little while ago, I didn't quite answer, is why do I feel like there's like 2025 is going to have some headwinds? I think a big chunk of it comes back to gold, which is, I look at gold as the planet, like the hive mentality. When gold goes up, we saw this in 2007, gold took off and rallied just before we had a financial crisis, before the bubble in equities and housing burst. And we're seeing the exact same type of run in gold. And so gold is the whole world getting nervous about things. There's war going on. There's huge currency shifts. Still, a lot of people think there's a bubble in the equities market. There's a bubble in real estate. And so people are trying to get out of the financially regulated stuff. And they're like, give me Bitcoin, give me gold, give me something different, right? And so gold's come to life. And that is like the big warning sign that I think we're going to get into tough times. And I think Bitcoin and gold are going to have some very interesting price action. I don't know how Bitcoin and cryptos will be affected during a big bear market, if they're going to get pulled down with it. I do believe gold's going to get pulled back probably 25, 35% with this in 2025. I think gold has hit a measured move from 2001 to the 2011 high. If you use Fibonacci extensions, 2750 was the peak that gold should reach, and then something is going to change. And so we just hit that this month, and gold's starting to pull back. Doesn't mean it's fully topped. It's just saying that move, that 15-year pattern is now moved, it's unfolded. And so now you really have to be like, okay, gold kind of play is done. I think maybe money's now flowing out of gold and going to go into crypto and it's going to have this big leg up. So I think we're seeing sloshing effect of now it's coming out of gold, sloshing into crypto, kind of in that way.
With that being the case, and you look at what's going on within the BRICS nations, they've came out very bullish around gold as a reserve capital for what they're trying to do. They're also starting to line up with some of the digital assets, Bitcoin being one of them. Looking at these, and you mentioned the potential here of a very risk-off scenario playing out into 2025. First of all, what do you think is going to lead us into that? Do you feel like it's this whole tariff concept with what Trump is trying to implement that could spin us into there where the Fed starts having to hike rates again? What are your thoughts there? What are some of the causation scenarios?
Yeah, there's a lot of stuff that could come into play there, but generally look at the stuff that I'm looking at that the economy is slowly grinding to a halt is we're seeing more or less consumer in the States, we're seeing excess savings has depleted. So people have burnt through their savings. We're now seeing the highest level of credit cards being maxed out and being delinquent. So people can't pay them off. They're giving up on it. So that's the first thing that people stop paying is usually their credit card. And now we're seeing commercial mortgages are defaulting, which have been rocketing higher for a while. Now residential is going. We're seeing unemployment slowly start to build up. We're seeing layoffs, less jobs in manufacturing, which is like a 3 to 6 month lead time for the economy. And so, and there's a whole bunch of other stuff, but to me, it's the momentum is stalling out. The housing market has been really soft. There's 1 million homes for sale, millions of homes. They're not selling because nobody wants to like lower their price. And so the bottom is about to fall out of the housing market and it's going to collapse. It's going to create a lot of fearful money. So it'll be, I think all of these things are just telling us that this economic tide, this cycle, even though there's an election creating a bump up, there's bigger cycles in the world and the universe kind of at play that you really can maybe stretch a little bit longer. but they're going to come around and pull the markets down. And I believe that cycle is like almost about to pull the rest of the economy down once I think the Trump kind of pop or bump is kind of done.
So if you're right, and Chris, if you are right on this, and you've got the Fed coming in with another quarter point just last week, most likely people are now pointing to December giving us another quarter point. That's a full point in what we've seen in the Fed funds rate. Sure, yeah, I would say inflation is somewhat checked right now, but I don't know that we've seen real data yet to give us a full insight. And plus, we're also in the holiday season, so it's going to be difficult to measure.
Yeah.
But do you think Chair Powell made the right decision? Do you think, because the way you're talking, it sounds like maybe he went out a little bit early on this in terms of the rate cuts.
Yeah, I think the Fed's always been way behind the ball, and this time I think they're way in front of the ball. Like they're already cutting. Like usually, in my experience, like the rate cuts don't really come until there's like blood on Wall Street, and it's brutal, right? Like layoffs and all that stuff. And here the Fed is just like firing off these rate cuts like nothing. They've got so many bullets in their gun now that they're just like almost. I feel like they're almost wasting them there because I think they're going to need them. I think things are going to get ugly. So I think they're ahead of themselves, and that is helping kind of boost the markets, the equities markets, and hold things up. But again, I don't really care what they do so much because eventually this cycle's coming into play, and it doesn't matter how much they cut, we still go into a financial reset, and all they're doing is trying to reduce the damage a bit. But again, there's big things at play that all they can do is kind of try to slow and cushion things, but I don't think they can stop, massive tides.
So, Chris, you look at the opportunity here that's in front of us right now. There is going to be possibly some short-term gains in this bull market that we're in the middle of. How long that lasts is still up in the air. But what you're getting at is that we are going to see a correction. When that occurs, and if you are right, where would you be looking at? Because that's going to where any of these corrections, that's what creates great wealth. Because these markets suppress down dramatically. Would you be looking at, some of the fixed assets like real estate? Would you be looking at going back into precious metals or possibly even the digital assets if they're suppressed, or just back into the S&P? How would you guys play that, kind of looking forward here in case the market really does crash?
Yeah. So when the market eventually, it's just a matter of time of when it crashes and where the top is. But eventually when it crashes, the key is to identify when it happens. And then have an asset to move to. So for all we know, bonds like TLT could be actually a good play while the stock market is falling. When the stock market falls enough and it enters a full-fledged, what I call is a stage 4 decline, this is like a financial crisis phase, you can take advantage of a falling market with inverse ETFs. Generally, you don't really want to buy stocks. You don't want to buy really anything because almost all assets go down. So you're best to take advantage from the tide constantly going down. So bet with the markets, meaning you want it to fall. And then once the market does bottom, it is going to be a game changer. People who preserve their wealth, who avoid the crash, either sitting in cash or taking advantage and profiting from collapsing pricing, you'll take all that money and there's going to be tons of opportunity. You'll be able to buy into dividend stocks. You'll be able to buy into precious metals, miners, uranium stocks. Probably, I would think a lot of cryptos are going to get beat up. I still believe when there is mass selling and panic in the market, it pulls almost all assets down. People just get scared and they liquidate. And the markets fall like 4 to 7 times faster than they rise. So it's all about riding this up, identifying a top in the market, preserving your capital, and then redeploying it, as you just said, once the bottom is formed, moving into whichever ones, I think gold and potentially crypto, if it's similar to the gold space, will probably bottom way before the equities market does. Housing market will probably take another year or two after the bear market is done. Housing is a slower beast. So everything's going to have its sweet spot. So you just have to kind of navigate, the best opportunity at any given time. But real estate is going to be one of my favorites. I love it. Get into multifamily. You can buy them at fair market value or below market value, and it's got good bones. You've got an amazing cash stream for life. So
no doubt about it. Well, one of the best investments out there for sure. Hey, Chris, it's been great having you on today. Thanks so much. We got to get you back after Bitcoin and crypto continue its rise. I want to get you on to talk about where end of January looks like if the S&P is up, what that might look like for the rest of 2025. So thanks for coming in today. Great. We appreciate it.
Thanks, Paul. Take care.
You bet. All right, you guys are tuned in on the audio podcast. Make sure and jump over to the YouTube channel. Catch us over here. And make sure and subscribe. All you have to do is click the bell if you want to get notified of our live streams. We do those as well. Catch our Diamond Circle. It's a very easy, it's our own free newsletter ourselves. And of course, the way you guys can do that is just click the link down below. Catch me out there on X at Paul Barron. We'll catch you next time right here on TechPath.